Hi traders, this is Houston Trong from thetradingedge.org, and here is your weekly market outlook for February the 24th to the 28th, 2020. And so we enter into the final trading week of the month. And this past week, the market finally ran into a wall of worry that seemed to be unsurmountable. So the continued coronavirus fears finally seeped into the current market narrative. And it's really threatening the growth and revenue prospects of a number of bellwether names. Now, this is, you might ask, well, this is really nothing new. We had seen the threat, the possibility of it, but for whatever reason, maybe it was Apple announcing that it was actually going to get affected this past Tuesday, that people finally began to price in that risk. Perhaps now people are taking it more seriously that there are potential significant supply chain risks because of the impact of those Chinese companies, manufacturing companies, and of course the potential for a slowing global growth story. Fewer people congregating, shopping. That means a slower retail environment and potentially weaker consumer confidence. So that finally came to head this past week, and it did bear itself in the charts. We'll talk about the charts in a few moments. And then we'll also dissect and see where things go from here with one final week left of the trading month. Now, for the econ calendar this week, a couple of things to keep on your sort of watch list. Number one, Tuesday, we've got the consumer confidence number at 10 o'clock. Not always a market mover, but always one to keep mindful of. Then on the 26th, Wednesday, we do have the home sales number, so that will be interesting to watch, and the oil number at 10:30. That will be significant because oil has been in a protracted downtrend here. Thursday will be a busy econ calendar day. You got durable goods at 8:30, GDP 8:30, and jobless claims at 8:30. So we'll want to watch for that. And then Friday, a couple of smaller items at 8:30, personal income and outlays. So that will be interesting to see, and international trade in goods at 8:30. So that will get priced into the market before the bell opens. Now, baked into that, mixing into that, is the potential earnings volatility. So we have quite a few big names reporting this week. So definitely check your earnings calendar. I'll just share a few that I'll be looking at. Monday, you got TNDM, so tandem diabetes reporting. So I want to watch how that one trades because that one's always a big mover. HTZ, so Hertz, the car rental companies have been really trading well as of late. So let's see how that continues. And on Tuesday, you got Space, so SPCE, so Virgin Galactic reporting earnings, and this one's been has been very, very volatile. So that'll be very interesting if you want to trade something with a lot of volatility. CRM, a great proxy for the overall SaaS market. Home Depot, people are going to be watching that as well. And let's not forget things like WW, so Weight Watchers, always interesting to watch as that one company often becomes quite volatile. Wednesday, Square, so that will be a good one to watch. Square, Etsy, kind of high beta tech names, and Box, BOX, because DBX has been knocking it out. Thursday, that's going to be a very busy day. Kron, so marijuana name, good play there. That should be interesting to watch as marijuana names may have bounced a bit here. Beyond Meat also reporting, so definitely watch that one. And we got TTD, another high flyer, so that'll be good to watch. And finally, Friday, kind of a slower news day. I'll be watching just Wayfair and Foot Locker. So let's get into the charts now and talk about the week that was and what to expect this coming week. As we always do, let's begin with the VIX, and then we'll get to the indices. So right now, even though we had a bit of a pullback on the indices, the VIX on the monthly chart, and you'll see some on the indices as the inverse, is the VIX right now is only trading inside month, so inside bars. So as much as things have looked like it's getting maybe bearish, the VIX itself has not turned around yet on the monthly chart. For this thing to get really, really bearish quickly, it would take out the prior month's high. If that happened with only 1 week left, then certainly fear has entered in the market quite aggressively, and that's going to be something you definitely want to watch for. You still need to wait for this month to close though before this inside month remains that way, and you can expect an inside month break from one side of the range or the other side. But for now, inside month trading. The week you finally did get that reversal. So as I said last week, it looked very, very likely that the VIX was going to take out this prior bar's low, that outside bar low. And I said in last week's video, if it cannot do that, you want to know that, because people are gunning for this, right? Because it's it's a very obvious pivot. And if the bears cannot do it, that's something you want to be paying attention to, and they couldn't do it. So they had their chance, but this past week they got a weekly reversal now, because it went one bar down, took out the prior bar's low, and then this week it actually took out the prior bar's high. We marked those ranges. So this coming week now, you want to be seeing, do we continue? Do we get a continuation of this move to the upside? Or if you break below this past week's low, then it's a continuation to the downside. It's a reversal back to the downside again. So that's the level you want to be watching for in terms of price action. But for now, let's take a look at the 2-day chart and how it ended on the week. Outside bar up. So there's your momentum up condition now. So buyers on the VIX are in control, and they got momentum on their side. So they're pushing it, and as we always do, we're looking for this momentum to continue until it gets extinguished. Not trying to get in front of it and get run over by it. Simply waiting for this bar there to get extinguished to see whether or not this momentum move continues or gets extinguished. Because who knows? It could continue to go 2 bar up like that, or come Monday or Tuesday, it can immediately take out the bottom that low, and the momentum will be extinguished, and it'll come back right back down again like this, right? It goes outside bar up. Looks a bit scary, doesn't it? Until it does this. Takes out that low right away, and then that just basically melts, right? So this is what you want to wait for now, is how long can this momentum condition persist on the 2-day chart. Now on the 4-day, because we did have that shortened holiday week, you didn't have the Monday, right? So you didn't have the Monday to price into the charts. So the 4-day chart is quite useful, because there's a bit of jockeying that happened because of the day off on Monday. So here we open up on Tuesday. So here's each bar represents 1 day. So sorry, each of these 2 bars represents 1 day: Tuesday, Wednesday, Thursday, Friday. So here on Tuesday, they gap it up, small gap up on Tuesday. And they can't do anything with it. So the bears here, because Apple had warned on Monday that, or maybe going into Tuesday, that they are going to get affected by their supply chain was going to get affected because of the virus. The markets actually gapped down a bit. VIX gapped up, but the bears, that means the VIX buyers, could not do anything with it. So here they had a big pop up, comes back down, indecision, inside bar, and then on Wednesday it gaps down. So this is bullish for the markets, right? This is when the markets went off and created new highs, new all-time highs. Inside bar, down. Inside bar. What do we know this pattern to be? Inside bar, down. If you short this, right? If you short that, it goes down. As soon as it breaks back above here, that's an inside bar reversal, because they're going to go immediately after these pivots there, right? They're going immediately after these pivots because we know those people's stops are there. Anyone who uses inside bars to trade, that's what they're using as their pivots. So the game is to take out their stops. They get stopped out right there, right? So Thursday, stopped out, inside bar. So here at the end of Thursday, that was the question: how does it resolve this pattern? Inside bar, outside bar, inside. Love that pattern, right? We will talk about that pattern all the time. That's usually going to be a strong resolution. It's usually means it's going to be more volatility, not less volatility, because you had an inside compression, outside expansion, inside compression. The next move is probably going to be another expansion move, not a compression move, unless it gets very, very tight, and you can expect, that at some point, once it breaks out at compression, you're going to get expansion. So every time you get an inside, outside, inside, you get some sort of larger move, right? That's just the nature of price. So if we can go back here, we can go back and examine those sequences here. I'll show you one right here. Inside, outside, inside, boom, resolves to the downside. All right, that's a 4% down move right there. Okay, so that's a very significant pattern, and I've talked about it in the past, why that pattern is significant. I just kind of alluded to it already, but I think you get the point here. Inside, outside, inside, pop. Okay, so same thing, inside, outside, pop. So there's the move going into Friday, and that's a continuation of this, right? So inside, outside, and up. It did manage to break above this here, that blue line is the quarterly, right? So that's the quarterly open. Let's just double check our chart here. Oh, that's a really tight chart to look at. So let's just put a log scale there. So now the quarterly chart here, so the 3-month chart, and this again, the quarterly is not closed yet. Obviously, we still have the, you have to finish out the month of March before this quarterly bar gets closed, but we now turn that quarterly chart. It's now green. So on that time scale, the people who look at that chart are now seeing a green chart. Okay, so you got a bit of time frame conflict. There is your a monthly open, right, way up there. Okay, there is your quarterly open, which you managed to close above, and there is your weekly open this past week. So you're still trading below the month, above the quarter, above the week. So now you want to see how can it resolve that. How does it get above that area, or does it fall back down again to turn it back to a red quarter? Okay, so we're watching this level here, that orange line. Did I draw it in here? Just make sure it's drawn in. Yeah, it's on the weekly chart. 1670 on the weekly. So 1670. See, if you look at the 2-day chart, or sorry, the 4-hour chart, let's go on the 2-day chart here. 1670, price has to break above here. See, that's 1670 area. Has to get above there before you get a, before you can actually take out the prior month's high, right? So quite a bit of work to do still, not impossible, but I'll just show you really quickly how far that is. So from Friday's close to that level, it has to move 12%. Not possible for the VIX. The VIX has been known to do crazier things than that. But if this happens, so that's what you want to be watching for. If all of a sudden you see a 12% spike this coming week in the VIX and it breaks above prior month's high, that's very significant. And that's what you definitely want to be paying attention, and you want to be managing yourself accordingly, or your trades accordingly. Okay, let's move on to the next chart now because we got a lot of stuff to cover. So on the SPY now. SPYs, Qs, look very, very similar. So first and foremost, the monthly chart. The momentum condition still is persisting on the monthly. Okay, so even though you had a bit of pullback here this past week, not a massive pullback, very a bit of a pullback, you're still above prior lows. Each month's lows are higher. So until you get a low get taken out, the momentum is persisting. Okay, so that's that. On the longer time frame is still bullish. Now on the weekly time frame, we had a red week, but not really that significant. It's only down minus 1.23%, right? So people got scared out quite easily, but this could be certainly an environment once again that they buy back right away. Because look at this week here. Remember, it was 1, 2, 3 weeks ago. We had a gap down. It looked like the world was ending, and they bought it right back. Right? So this is kind of maybe a same situation again, where it had taken out the prior week's high, and then all of a sudden on Monday, it gapped down, and then you spent the rest of the time buying it right back again. So that's still a possibility because you're still trading above the monthly quarterly open right there, right? At least this bar there, when it came down, you're below the quarterly, but even then, they bought it back in the next week. So that's a situation you want to watch for again. Do we stay above or below this quarterly monthly open? For now, right, you want to see, if we can break below the prior week's lows. So I'm going to redraw the range that we're looking for here. All right. Do you break below this week's lows, or do you get a continuation move and you break above this past week's high? All right. Because on the daily chart, this is what it looked like. So here's the daily. Here's your Tuesday, Wednesday, Thursday, Friday. Here. Tuesday. Inside bar down, right? So we have that small gap down. Again, the reverse of the VIX. Then it goes inside bar reversal to the upside. They take out everyone's pivots. So anyone who got short in that sequence, right, they get stopped out, right? So inside bar reversal, stopping out anyone who went short here, and they put their stops anywhere in here, back to all-time highs. And then to the downside, just like the VIX, right? Just like the VIX, but the opposite. On the 2-day chart, like the VIX, momentum to the downside. Okay, so outside bar down now. We're waiting to see how far can this momentum take this move. We got a bunch of unfilled gaps to the downside in the SPY. I've been saying this for several weeks now. You have to watch out for the downside if it starts to kick in, because we have a lot of poor market structure down there. So that would be a combination of lots of gaps, lots of folks who are chasing this sequence here. If the price comes right back through, it's going to rip right through. You're going to see a few charts that look like this. What happens when price comes right back through the range again? Because oftentimes the price that comes back through the range is more violent than price simply trending upwards. Because as people get stopped out, those moves are a lot more aggressive than these slow grinds up. Like, look how quickly price in the markets correct versus how long it takes for it to get up to there. Correct? So you can see how long it takes to get from here to there. It takes like half that time to make it back down again. Okay, so as I say, markets take the stairs up, but the elevator on the way down. Okay, so that's what you want to be watching for, is if price continues and breaks below the prior week's low. We know that low is right there now. Okay, now you got to watch out for the potential for it to come back through the range. So there's your daily chart on the SPY. All right, on to Qs. So very, very similar. Monthly chart, momentum up. 1, 2, 3, 4, 5. Basically 6 green months in a row. Still green for the month. This past week, we had a slight red week. So down 1.86%. So more negative than the SPY. But did not take out the prior week's low yet. Okay, so we're waiting to see if that happens. So we're going to redraw this right there. Can we take out this prior week's low? If that happens, there can be the potential for it to come back in here and retest this range there and then there. But right now, trading above the monthly and the quarterly, so you have time frame alignment on those wider time scales to the upside. Now on the daily chart, very, very similar pattern. Here, there's your Tuesday, right? So gap down, they bought it right back, and when it was aggressive because it went outside bar and up. Okay, so here's your Wednesday. Here they're climbing the wall of worry, right? This is the wall of worry. Then they ran into the wall and they could not climb it any further, and right back through the range again. See how the market's here? They're grinding higher, taking the stairs on the way up, and here's the elevator on the way down. So if you take a look at this right there, this is a momentum move to the upside. As soon as that low gets taken out, Wednesday's low, that is called an extinguishing of momentum, and that's what happens. So that weak structure, this choppy stuff on the way up, people get stuffed up very, very quickly on the way back down again. Okay, so that's what it looks like on the daily chart. On the 4-hour chart, it's a little more illustrative. So here, momentum move. So going into, so this is the 18th, right? So here's your Tuesday, outside bar up. So new highs, new all-time highs for the Qs right here, right? Chasing, 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 all the way up. Momentum move right there. Here's your Thursday, opens right there, retests the prior low, right? A little bit above that, and then rip back down. Inside bar, continuation on Friday. It's continuation. It's all it's continuation. So on Friday, what do you think your bias is going to be when you see this? You go inside bar down, right? What's your bias going to be? Your overall bias needs to be short on Friday, until you can get a reversal on the 4-hour chart. The only way you can reverse on the 4-hour chart on Friday is to break above that. All right. So once you understand price, you realize that that things happen in a sequence of time frames, and they all have to play together in order to have trend. Right? So in order for trends to actually work, they actually have to follow a certain order, and that means they have to be aligned. So there has to be congruence in terms of a trend. You cannot have time frames that are mixed in order to have trends. In this case, you had the majority of time frames, the short time frames, pointing down, and so it becomes very, very difficult to take longs. And if you're taking longs on a Friday, right, going intraday trades especially into a Friday, you're running against the trend. So there you go, inside bar down. That's the continuation move. So like the SPY and the VIX, there's your momentum move to the downside on the 2-day chart. Outside bar down. Question here now is, does it come back through the range? Because look, on the way up, we had this outside bar up, right? So they chased it. Outside bar up, 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 up. So remember, each bar is 2 days. So 2, 4, 6, 8, 10. That's 10 trading days. Okay, so basically 2 full weeks of nothing but green bars. Then finally, this past week, we only had 2 bar sessions. So there you go, 4 trading days right there. Rip, rip. Okay. Let's talk about, let's do Russell. Russell now. Okay, Russell, the weakest of the bunch. Well, why don't we do Dow first, because Dow looks a lot like the Qs and the SPY, and we'll get that out of the way. So Dow, here we go. Outside bar up, 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 right? So same thing as the Qs and the SPY. Unlike the Qs and SPYs, though, this thing did reverse. So see how this past week here? So on Friday, I think it's Friday, we broke below the prior week's low. So that's not significant because now you're seeing a reversal, a weekly reversal on the Dow chart. Okay, so prior to that, you had an inside bar reversal, right? Inside bar down. As soon as it broke above there, it came back out the other side and stopped out everyone before it went to all-time highs. Here, as I've been saying, you're making the all-time highs, but you have fewer and fewer underlying stocks following along. So the market breadth is poor at this point, and it's been trending downwards. So now you begin to roll over, and let's see how far it takes us, because you do have an unfilled gap right there on the Dow. That one right there. So a couple of real gaps that are really close to that are nearly in play here because they're right there. So on the Dow, let's take a look at that 2-day chart, because that tells the picture very, very cleanly. Same picture as the last couple of charts. Outside bar up, got extinguished here. Not this week, actually got extinguished last week. Right, so going into the last 2 trading days of the prior week, Thursday, Friday, it broke below there, extinguished the momentum, and then it came right back down the other side. Right, so it came right back through this range. Now you got that gap right there. So on the 4-hour chart, this is what you're looking for now. If somehow the buyers can step up on Monday, and you have some good news, and they step up right away, then you can have a potential inside bar down, inside bar here. They pop back up above here again, it's a potential inside bar reversal to the upside. So that's what you want to be looking for. However, you do not have all the it's going to depend on where you open and how you transact relative to that weekly open, because this past week you're trading below the weekly open. That's this purple line. Once you get below that purple line, the trend on the weekly chart, at least on the weekly side, is to the downside, but you're still trading above the quarterly and the monthly open. But here, if it opens, let's say the weeks open down here, it opens down here, right? If it pops back above, then you're going to be above the week, the quarter, and the month. And you definitely want to know that, because then the majority time frames are looking green. So watch for that on the Dow. Let's go Russell now. Russell, simple chart. Here we go. Not a lot of carnage yet, is there? Right? Inside month. So up 4% still for the Russell, but you're basically tapping on this broadening formation here. You cannot get above it. You can't clear it. This has become a bit of resistance. Let's see now how probably in March we're going to get some sort of resolution. Probably not going to get outside of this range in the month of February. You know, crazier things have happened, so we'll wait and see if things begin to really break down or not, or stay this way for one more week. So this past week, Russell really hung in there, only down 0.5%. So out of all the indices, it really hung in there. So we'll redraw our ranges. So it did break above the prior week's high there, and we want to see here now, can it break below this prior week's low? So, all right, so there's your daily chart. That's what you want to be looking for, right? So now there's your weekly low right there. Touched it on a Friday, and so now there's a break below that low on Monday. And can we come through that range, or do you pop back up again? Because here's, this is what happened. Outside, inside, down. Okay, they stopped up these folks here, and then did an inside buy reversal and stopped up the folks to the upside. So they both got stopped out on both sides of that sequence. Okay, so let's not forget that we had been watching this sequence for a while, and I said it's probably just a matter of time before we take out this bar's high. We did this past week, right? So inside bar down and up, inside bar reversal, we're looking to take out that pivot high. It did not happen until the prior week. So this is what, 168.99, 168.95, right? And here, this past week, we did it, right? Finally took out that pivot high. Anyone who was short, hoping you would not get your stop hit, and you put your stop right there, they finally got hit this past week, but then the markets came back in again. So definitely a little bit of a probably feels like you got high ticked if you were short here, because you barely got stopped out and you had a short on for a while. Here is your stop here. Let's see, you put your stop right there, 168.99. You finally got high ticked right there, 169.14. Or it probably felt like you got high ticked, but the reality is that they were going after your stops. So don't take it personally, because your stops there. That's the risk of putting your stops around those pivots. Let's talk about the TSX now. How did our Canadian stock market do? So for the month, pretty green month still. A little bit of selling this past week, but still up 3%. Nothing to sneeze about there. Now on the weekly chart, a little bit of an inverted hammer here now, right? Look at the last time we got inverted hammer right there. Inverted hammer, shooting star. So this past week we did break above the prior week's high, but now we're forming this bit of an inverted hammer. If we do break below this, right, there's potential to come back to the range again. So that would be a reversal on the weekly chart, and that's a very tight range, right? So that's a very, very tight range. It would not take much for it to break below that. So here, right, what happens with the TSX? Can it somehow break below this prior week's low? Because on the 4-hour chart, let's take a look at that. You got momentum to the downside. Outside, inside, resolved the down with another down move. So you get momentum to the downside now. And can it come back through this range and take out the prior week's low, that purple line right there? And that will cause the weekly reversal signal. And that's something you definitely want to know about with one final week of trading left. Emerging markets now. Okay, so emerging markets, this is the story I've been talking about. It's probably going to be Chop City because no one really knows what's going to happen with this coronavirus story. The news flow continues to come out slowly. It's seeping out with new ramifications on a regular basis. So the market's having a hard time, or is doing its best pricing things in on the fly. So right now you're still left with an inside month. Outside, inside. Something is significant going to happen here when you have this type of sequence, because people are getting stopped out all over the place, left, right, and center. Right. Anytime you put your stops at the edge of pivots, at the edge of either side of these bars, you're going to get stopped out because the market's testing both sides. So not only did it do that in December, then let's say you put your stops even wider. Now in January, it takes out once again both sides of the range. You get stopped out either way, right? And now the month of Feb, consolidation. So anyone who got really aggressive now in December or January has been having to sit on their hands and really do nothing, or they're getting chopped up, right? Because you're inside the prior month's range. That's something you definitely want to be aware of, the importance of understanding ranges. And that's what trading in a range looks like when you're inside of not just the prior month's range, but look, you're also in December's range, right? So inside that and that month. So tight stuff. Once it does break out, though, remember, it's your consolidation or compression stage here. If it stays this way, then maybe the month of March, something's going to happen. We're going to wait for that. But this past week, we did get the reversal. So finally, the news flow turned a bit bearish. And if you recall, last week, the prior week, it did go inside weekend up, right? But had mixed time frames. This is what I was talking about, the choppiness of it, because you had your quarterly right there and your monthly down there. So, you have a mixed time frame, and I call it a conflicted view, because not all market participants are in agreement. So this is what happened. Inside bar up, reversal now. So now you can expect this pivot to go up to this pivot right there. And if they can take that pivot out, that will turn the month red. Okay, so that's something you definitely want to be watching for. Can they do it? Because right now, they do have momentum. So there. On Thursday, outside bar, right? And then Friday, outside bar down momentum, breaking the prior week's low. So you can see how choppy this stuff is, right? That's really choppy. Pop, 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 with gaps in between, right? So that's really choppy stuff there. Hard to take a position without getting stopped out, like if you're or putting a really wide stop. So that's a really tricky chart to trade if you're just looking at individual bars and not looking at the bigger picture. Like when you zoom out, it gets a lot cleaner, right? This is why we do the hard time frame stuff, because if you look at this chart, it's clear. You take out that level there, you're going here. But you look at this chart and you get lost in the forest. You're like, I don't know where that's going. If you zoom in, especially to this sequence here, that's a crapshoot, right? Especially if you're just trying to make day-to-day decisions. Like, I don't know if that's going to gap up or gap down, gap up, down. Who knows, right? So that's the understanding there, is we're trying to always see the bigger picture. So now we know outside bar down, and why that's significant. We're not taking it in isolation. We're taking it in context. It's now taking out the prior week's low. And now, look, you got a gap right there, right? And there's your monthly open. So you want to be aware of that. Here's your 200-day moving average. Okay, so that's the EM story. Bearish action to the downside now, and until that momentum gets extinguished, the bias is to the downside on EM. But very, very fluid still, because the bigger picture, again, inside month. Don't forget that, right? So even though we're getting after these levels here, you're not expecting a lot this past with one week left, because you'd expect this thing maybe could turn red, but certainly you're not going to break below that. Well, I'm not saying not certain, but it'd be harder for it to do because it's inside month trading. And as soon as you get a reversal, it's going to come back up again, because that's the nature of choppy inside conditions, range bound conditions. There's your quarterly level. Tight stuff still. All right, let's talk about some risk products. TLT, did they get back into bonds? They sure did this week. They sure did. So the bonds continue to go up, right? So inside bar reversal finally took out that level we talked about. So we said, okay, this level here is fine. It's probably going to get taken out at some point. They couldn't actually. Sorry, it was this bar here. And they finally took out that bar as well. So this bar here did not quite get taken out. If you recall from the past few videos, I'm like, okay, this level here, 146.03, came really close here, 145.99, 4 cents away, right? It took a while, but they were 4 cents away. So the guys who were long here probably got very frustrated because they're like, oh, I need to take out that pivot. It did it this past week. Okay, so that inside bar down and up again, reversal, inside bar reversal, so you've heard me say it now a few times. It finally got that pivot taken out there and took out that pivot as well, right? For good measure. 148.67, 148.88. So there you go. What's the high there? 148.90. Ooh, close, right? 2 cents away from hitting those. Is that all-time highs? I think it is all-time highs. Yeah, close to all-time highs, and we can probably move higher because there you're not going to have that resistance line until up here. All right, so we can probably move higher on TLT. On the weekly chart now. We were watching for it last week, right? How is it going to resolve the inside week? How to do it? Inside week and up. Inside week and up. Okay. And how that looked like was pretty straightforward. Here's your Tuesday. Gaps up. So there's the fear in the market. And even though they bought back Apple stock, they never gave up buying bonds. So it looked like the risk on environment was back on again, but bonds was not in agreement with that because people were buying bonds at the same time as they're buying back Apple stock, which was a bit, odd because the equities markets were going up, the bonds were going up, and what else was going up? Gold was going up, right? So we'll talk about gold right after this, but here's your very straightforward pattern. Cracks the prior week's high, right? So there's your inside week break right there, right? So we were watching, see how is it going to break the inside week right there? Then you basically have a whole day to get positioned because it goes inside week up, consolidates, and it was pow the last 2 days of the trading week, right? So there's your move on TLT. Okay, now let's talk about the gold trade. And this one here, on look at this chart, I'm looking at the micro gold futures, MGC. I've been liking this chart a lot. Painful for me to look at this chart because it really irks me because I actually missed this trade. This trade here, I missed it, and I could not. For many reasons, I could not get myself into that trade. But it really irks me because we had laid out the trade pretty clearly last week. And I missed it. So unfortunately, it's the nature of trading, and there's always going to be other opportunities. But looking back at this chart, it still hurts to to look at it. So here's the monthly chart, big green month, gold now. Ooh, that looking good. Well, this is probably not right here. This one bar. We'll have to look at another contract because that's definitely not correct there. Because that year, what is this? Yeah, it's probably bad data or just the way that this thing is being rendered. Yeah, because I don't think we had that big of a move. I don't think we had a 900% move in the month of March. Maybe we did, but I don't recall that. I'm just curious. Sorry, I'm just gonna bring up XAU for a second here. Yeah, so we did not have that that on most other. I'm sure if we bring up the GC contract, maybe it's just the MGC contract. Just really curious. Yeah, so that did not happen. So anyways, the MGC, whatever the data is being presented here in TradingView, not quite correct if you go back to this month, but we're not looking at that for now. It's good enough to know that it's going into. Sorry, I'm just jumping around a bit here, but I do want to see all-time highs and how far we are. All right, so we're still a little bit far away from all-time highs. Previously on the gold futures contracts, we had hit 1923, and we're currently trading at 1648.8. All right. So $300 roughly before we get up there. So nice green month for gold futures, and we were looking at this chart. All right, simple stuff. Outside inside. How is it going to resolve that outside inside pattern? Right? Because if you take out that high, you're going to take out that high. That's going to turn the month green, which it did. And so here's pretty much on the daily chart, nothing much to look at there except it's going green all week. Here is your open. So there's your open right there. Yeah, so there you go. Okay, so just straight up. Nothing to really figure out there. It's just going straight up. Here's the trade though. It was very, very nice and very simple, but you had to take it though on Sunday night when the futures pit opened, and I missed it because I was not around on my desk at 6 p.m. on a Sunday. I got to my desk I think around 8 or 9 p.m. and I just missed that trade. Just missed it. So here. Inside bar down going into Friday, and then Sunday night opens right there. Right, so there's your open, and I just missed that trade. Sorry, I misspoke. I said that it was on Sunday. It was, excuse me, it was on a Monday, because the markets were obviously closed on Monday because of President's Day. But it was, I was not around at my desk at 6 p.m. on Monday, and missed that trade when it opened up. And so there it was, inside bar down, inside bar, and so the buy here is above this inside bar, because that is your inside bar reversal. You had a chance to get filled right there. So it opens up, small gap up there because of the open, comes back in to fill the gap. There's your tap. You could have got long, and then it proceeds to move. If you had to put your stop down here, proceeds to move all the way from the high here was 1585.20 all the way to 1652. All right, so a good what do we say here, 1585? Yep, 85. So man, that's a nice move. Yeah, so it gets close to 70 points there on MGC, and just based upon that risk-reward ratio, that would have been exceptional. It would have been close to a plus 20R move there. Without, you get a bit of a pullback here on the 20th. This is an 8-hour chart, outside day, but then it picks up. It goes inside outside with momentum to the upside now, right? So here you want to watch this. It's going outside bar up now. There's momentum in gold, so you want to see how far that takes things. On the weekly chart, you just want to keep, it's going right in the highs here, so you have to watch out it doesn't pull back. Right now, you're not going to get a reversal on the weekly chart until you take out this prior week's low. So that's going to be a tall order there. So let's just now put our levels in. Can gold continue and take out this prior week's high? So that's really nice setup, and that's why we like to watch those outside inside patterns. Let's talk about digital gold. So I want to step away from that chart there and drown my sorrows in Bitcoin. Let's take a look at BTC. BTC did have a pullback though, so it's kind of going the opposite direction, although not with a lot of pace. So right now, still looking for the longer time frame charts to play to the upside, because it did go, let's see here, is this the right chart? BTC Bitphoenix, yeah, we're on the right one. It did go inside bar down. This high is higher than that high, so we're looking for that pivot to get taken out. 13,174. We're looking for that pivot on 3-month chart. It may not be a straight line shot though, right? This is a 3-month chart. It could take some time to play out. So now we have small pullback now. That's not as green of a month as it was earlier in the month. 1 week left, it's only up 3%. But on the weekly chart, we did get that reversal signal. So here, when that's one side up, this past week went one side down. Now it tapped the monthly open, and it supported it. So the buyers held it, and that means the month is still green. So in order for the buyers to get aggressive, they got to take out that prior week's high for things to reverse back to the upside. So here on the Bitcoin chart, just one final thing to look at here is going into Sunday. Right now it's Saturday, and when I'm recording this, Sunday when the market opens up at 7 p.m. Eastern Standard Time, if this pattern still holds, it will be significant. Outside, inside, this weekly line here will be wherever the market opens up at on Sunday night at 7 p.m. Eastern. We want to see how this, if it stays this way, how this outside inside breaks. That'll be very significant, because the weekly chart may be in alignment, right? If it breaks to the upside, then that will be in alignment, and you're gonna have price trading above the weekly open, the monthly open, and the quarterly open. That'll be very bullish once again for Bitcoin. All right, so let's just wrap up with a few fast fire charts, and we're going to take a look at some stars and dogs, and more importantly, we're going to see where the money's been going, right? So where's the money been going? Let's follow the money. So let's look at our daily chart. Let's focus on that. Let's look at the dogs first. Where is the money going? Well, the money is not going into oil names. So they're still leaving the oil names at a pretty good pace and a good trend. So I'm using a modified Sharpe ratio to identify some trending stocks and the strength of the trend, and the trends are actually getting stronger to the downside on these oil names. That means they're pushing the pedal on these oil names. Eventually they will bottom out, but right now names like Diamond Offshore, WTI, look, these are making new lows, right? So it's not like they're consolidating, they're actually making new lows. WTI, MRO, these are all names that are still hitting new lows. And wow, look at the volume coming into some of these names. At some point this will cease, but right now the money's getting out of these names, and at some point you want to be watching for excess, right? Is there excess selling there, and for the potential for reversal? I'll talk about that. Well, maybe not too much, but I'll show you a few names that look like they may have reversed. Now the money definitely left some SaaS names. So we had a lot of earnings this past week. earnings still coming this coming week, and some of the high-flying SaaS names, so enterprise software names / SaaS names / cloud names, they've been getting hurt. So Workday, look at those three bars. Wow, significant. Look at that. Takes out all those highs. So grind up, right? Elevator down. CrowdStrike, right? So here's a antivirus or security company. Not antivirus, but it's a security company. So there's your ripping move right through the range. So this here, you can just eyeball it. That's an outside week, right? See that? Outside week. That red bar there. See the red diamond? You can just eyeball it now, because you can see this high is higher than the prior week's high, and that low is lower than the prior week's low. Outside bar, that creates a broadening formation. I don't know if you can eyeball it or not, but these are very, very nice, because you can just see it over time. Comes right back through the range again. This low is lower than that low. So depending on how things continue to play out, it can, it can do something like that or continue lower. Roku, here's a name that finally got hit after earnings. So look at that outside bar. This is last week I talked about the significance of outside bars. Just once you understand outside bars, you really understand and begin to appreciate how important they are in trading. So there's your outside bar, right? So anyone who got long and thought they were going to make a lot of money on the earnings, well, they did a bit until they came right through out the other side. And there's your outside bar. Outside bar where? On the week, right? On the week. Well, is that going to be outside on the week? Oh, sorry, on the month, because that's taking up the whole range. Yeah. So not only is it on the week, look, this bar here and this sequence is bigger than the whole month. So anyone who got involved at all, right, in this sequence, in the month of January, if you put your stop anywhere in here from there to there, you probably got stopped out. Look at the month. Outside month. Ouch. Right? So here you thought you were making a bunch of money the upside until it goes down out through the other side, and now everyone's a loser. Okay? But it's outside bar and down, down, down. Momentum to the downside on Roku. How far does it go? Well, my friend Claude in my chat room, he's watching this one quite carefully, and yeah, I think he's right. It's here outside bar, sorry, inside and up, inside bar and down. So this is an inside bar reversal now. A little bit choppy on this. I'm gonna get rid of this. A little choppy on this month here because it did turn to an outside bar. But there, that pivot here is in play. So November's lows, and then we'll see October's lows. We'll see there. Okay. So what else we got? Yeah. So I talked about some other SaaS names. Zscaler. Ouch. Same picture again, right? So a lot of companies now you see a lot of stocks that look like this. So you get to grind up and then the elevator down on earnings. Okay, so outside bar, outside week, yes, outside week. AYX, another example of that. Same story again, right? Grind up and elevator down. And Wix, another same kind of tech name. Boom, boom. You can just see it, right? How price action works. Drags them up, and then elevator down, stopping everyone who got long in this sequence. So anyone who got long pretty much in February got stopped out on the upside. All right, so let's take a look at some of the stars now. Where is money going? Well, you already saw that gold chart. So anyone who's got any gold exposure, like WPM, wheat and precious metals, look at that strength. Look at the trend of that. Look at the strength of that trend now on WPM. Right, so up to the upside. Pretty much pull up any gold miner. So that means you can look at GDX. Look at GDX, strong trend now. So this is the gold miner ETF. The junior gold miners, same thing. You can't go wrong gold miners in this environment, right? Or silver plays as well. So what do you think? Is risk on or risk off? Well, tell me this. If it's risk on, or risk off, excuse me, why is everyone buying Dollar Tree, right? So Dollar Tree, people going into that stock now. Dollar Tree, so do people really feel great about themselves if they're shopping at dollar stores? Dollar General, look at the strength of Dollar General the past couple weeks, right? And this thing is going into, look at that. Did it break above? Yeah, it did it. So it went to multi-year highs. So people are rushing to dollar stores because what? They feel great about themselves and the confidence. Yeah, we'll see about that, right? And one final name. Actually, look at this. So we talked about steel names last week and how they're possibly bottoming. And this is what you're beginning to see now. Look, this past week. How does that make sense, right? If you have steel names bottoming and people are scared of slower global growth, then shouldn't the steel names be affected? Well, maybe not, right? Because look, X had 4 consecutive green days, now outside bar on Friday. So this could be you know, it could be a trap for the buyers, because all of a sudden, if you break below that low there, you come back through this side again, take out, you know, breaking back below the monthly open and the weekly open. Quarterly open still up here, so that's something you need to watch out for if you're long steel names. But right now, the steel names did bottom a bit there because they're not selling as much anymore. And look, on the weekly, it created the reversal. Outside bar down, broke above that high. That momentum from the downside got extinguished with this outside bar here. If it goes outside bar up, so that's when you want to see how far it takes it. So there's your X. This means, you know, looks the same for letter NUE, Nucor. Same kind of thing. Look, outside, inside. It'd be interesting on Monday if we get inside, all right? And then we can see some volatility. So watch out for that one. And AA, Alcoa. Okay, so the name that's seemed to bottom. Like, look at this move here, right? We talked about steel stocks being hammered because of the Corona scare, but look, Alcoa actually bottomed back in the end of January, and it's gone up. Let's just measure that move here from here. Let's just say this from the month of month of Feb. It opened right there. And right there, up 20%. Month of February, not bad for a stock with a lot of potential global exposure and global growth exposure. And finally, the final name, marijuana. We had talked about this, you know, the elevator down on marijuana names. MJ, the marijuana ETF may have finally bottomed here. Why do I say that? Weekly chart. We took out the prior week's high. Okay, so now. So it took out that prior week's high. I'll just draw it in. This will be my final chart. Okay, you're trading above, well, not trading above it, but you're still below the quarterly open, still below the monthly open. But you did take out February's, the prior week in February. So back to the daily chart here now. Daily chart right there. So this past week, on Thursday, you broke above the prior week's high, and it goes inside bar now. So if it goes inside bar up, there's your continuation move for MJ. That's what you want to watch for. If it goes inside bar and down, so on Monday, if this thing goes back down again, that's an inside bar reversal. So either way, you want to be watching these names because some significance is going to happen the next couple sessions. That's going to tell you more about the direction of the trend. Okay, because this is potentially a good turning point here for MJ names. So don't forget, we got Crown reporting on Thursday. Got Tilray and the rest of them, CGC, that have been in play lately, right? So Tilray having a good little move here this past week, right? So here's another name, Tilray. Again, took out the prior week's high, right? So you can see that prior week's high got taken out, and it had a good plus 11% week there on Tilray. So not a bad week for Tilray. So now does the rest of the marijuana names follow? All right, so that takes us to the end of the video. As always, I want to thank you for spending time with me and listening in and tuning into this week's video. If you have any questions, please feel free to leave them in the comment section, either on YouTube or on our blog. Speaking of YouTube, if you like the videos, please subscribe. That way, you'll get a notification as soon as they're published. And if you like, you can always subscribe to my newsletter. If you go to thetradingedge.org, you can sign up there, and that way you'll be notified as well if you want to get a weekly email from me with some of my other trading perspectives. So just want to wish you a happy trading week, and of course, have good trading. All the best, and talk to you next week.